They're another platform you can use. You can trade from your cell phone. And then another trick for those watching this is with stable coins. You can, when you're trading your crypto and you get profits, turn your profits into stable coins and leave them on a platform like Voyager or Celsius. And just as long as you're meeting the minimum requirement, you can earn passive income.
So when you say turn them into stable coins, so does that require that you like sell out of, say you sell out of, okay, with me, I have Bitcoin transparency, that when you say take profits, to me on the stock side, that means that I sell the underlying, issue, which in this case would be Bitcoin, then take the money and put it into stable coins aboard an exchange? Yes. Okay.
Yeah. So what you can do, this is not financial advice. This is just a tip or a trick for somebody that's trying to compound. Let's say you bought Bitcoin at $20,000 and price goes up to $30,000. You know what? And you're like, I want to take some profit here. You can pull some, you can take, maybe pull a little bit of profit out, whatever works for you, pull out your initial investment. If that's what works for you, that's what I tell people to do because it makes sense. So you don't have no risk on there. After you removed your initial investment and profit, you have created a Moonbag. The underlying asset is now yours free and clear. It is house money. Like if you're at a casino.
What's a Moonbag?
Okay. So a Moonbag is a cryptocurrency. And let's say you put $1,000 into a cryptocurrency. Number goes up and you're like, heck yeah, I've made some profit. So let's say your $1,000 turned into $5,000. You want to remove your $1,000 profit, or excuse me, your $1,000 initial investment you put in.
Okay.
Then you want to say, okay, well, I've got $4,000 left. That's all house money now. Well, kind of house money.
Yeah.
Let me pay myself. So I'm going to go ahead and pull out another $1,000. So you have your initial, you have your profit, and that $3,000 of however much that asset is left, whatever it is yours free and clear. So you hit big in a casino and you've taken out your initial investment and your profits. So you can kind of let that asset ride, or you can take more profit out. And what you want to do is then you want to take your profit that you made and you can either invest into another project and flip it and do the same thing, or you can invest into a stable coin and get that, which is pegged 1-to-1 by the US dollar, and put that into an app that's going to give you passive income on these stable coins. If you use USDC, which is one of the safest stable coins on the market, you can earn up to sometimes 8 to 12% back per week or per month, depending on the platform you use. Your bank will pay you 1% if you're lucky for your savings account.
So stable coins, well, again, because the deal with crypto is that it's decentralized. So what you're doing is people are borrowing. Is that how you're earning the interest?
Yeah. So crypto is, majority of crypto is, well, we can argue that, but stable coins are not necessarily decentralized. They're just a way to go ahead and remove profit and to kind of pay your bills and do whatever it is you're doing. But basically you're putting your money on the safe DeFi platforms like Voyager or Celsius or Gemini or crypto.com, and they're lending the money out. They're taking your initial investment, or they're taking your money, they're lending it out just like a bank does, but they're paying you higher rewards. And those are safer platforms to use. They're 100% licensed and regulated. And of course, there is still risk associated with it. But at the same time, too, if you want to get that higher interest back, you might want to consider taking risks and see if that works.